Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 4:20 in New York. It is Tuesday, the 17th of January, 2017, and this is the Daily Report for Gold and Silver. We are seeing a nice, strong rally in the precious metals markets, with gold and silver both trading substantially higher on the day, U.S. dollar under pressure, and we have seen a real nice move well above 1,200 at this point in gold. Currently, when we look at gold futures, this would be Feb futures, we're trading at $12.1540, putting it up about $19.20 on the day. That is a gain of about 1.61%. Now, when we look at the highs and lows, of course, we are looking at this in comparison to the close on Friday. 1198 was the low. Today's high, which was obtained in overseas trading, is 1218.90. And as I said, we're settling up close to $20 on the day. Of course, we do have an active trade going, and it is now time to raise stops. We'll talk about that when we pull up our first set of charts. 1215.65, you can see that Forex or spot is still trading. Net change, of course, is a little bit different. Now, silver is really showing some nice gains today. When we look at March silver futures, we're trading at $17.20. That is a 43-cent rise per ounce, or a 2.5% gain on the day. The low being a 1680 and the high 1724. So traders, here we are with roughly 3 days until President-elect Trump becomes the 45th president of the United States, and about halfway through the first month of calendar year 2017. Since really December 15th, so for about the last month though, we have seen a real solid bottom form, and it formed at a 75% retracement as we had anticipated at approximately 1123, and really has moved to higher ground since then. Now, of course, we took a position on a little late to the party, but nonetheless, we did get an invitation. We accepted the invitation and we're at the party. So even though we showed up a little bit late, we entered this particular trade at 1180. The market is currently at 1215. Our stops were, I believe, below about 1140, and it was to protect us from any kind of extreme volatility. We have weathered that. We needed to see the market breach and close solidly above 72. We had one day in which, in fact, we put the trade on right here, and the reason I remember is the next day it was down roughly $10 after that big move up. But from there, except for one day, and that day being on Friday of last week, we have really seen this market accelerate, now closing above a 50% retracement point, and that was one of our first real targets here, to close at 1215.40. Now, based upon that, I absolutely am looking at the $1,200 mark as a level where we should see some very, very strong support. That would come in right here. And then, of course, when we look at the low of today's trading activity, that came in at 1195. So my recommendation, or 1198. So my recommendation is to move our stops up from where they exist and move them to below 1200. My suggestion is 1195 on a stop, and that would be my recommendation. This way, if we move it up, I want to move it below today's low, and that's only a couple of dollars, but that would in fact lock in some profits, small profits, and those profits would be the difference between our purchase price, which is 1180, and where we get out. If it did come down and we got stopped out, of course, we would get stopped out at 1195. So I don't want that to happen. I will talk about my upside target in just a second. But for right now, traders, I do suggest that you do trail your stop up and trail it up to the point that I've just mentioned. Now, let's go to our target. If we look at this 50% retracement point, we draw our line across, we can see that there is pretty solid technical evidence that this is an area that we want to hold above, because this would become support just as it was support back in March, April of last year right here. Let me get a different pointer. That was supposed to be a highlighter, but as it would be right here. And then in June, July, these lows that we got at around 1200. And really there's nothing that we can derive from the break below that. It wasn't really a really strong or hard rise, because at that point we were still reacting to the election results, and you can see that right here on this particular day. So this fall from grace as the market dropped down, I don't really believe that there's any technical evidence right there, but we certainly do get technical evidence in these two areas that this should provide us with a market that, at least on a technical basis, will be a supportive point. Now, the next level that we want to look at is a 38% retracement, and we're going to draw our highlighter across, and the 38% retracement comes in at 1251. Now, should the market continue to rise, which I am expecting, at least going into the inauguration itself, and especially if we see the dollar come under pressure as we have recently, we could easily move to that point. And then I draw your attention to these series of lows that came in last year, October, November, at around 1251. That's after reaching the yearly record high and then moving lower. So we've got an area here. We can also see an area here. And here it's very, very nebulous. You can say that there's some sort of area of resistance, although it's not clear cut by any means. But I do believe that our next real target, and the target that I would look for this market, if it's going to A, rise, and then B, find some sort of softening or resistance, that would be the point we'd want to look at. For right now, though, I believe that based on the technical data that we have available, as long as we get solid support here at about 1212 and this price point maintains itself, not above 1200, but 1212, the 50% retracement point, I believe that we've got a real shot at 1251. So traders, as far as silver goes, silver had not been performing to anywhere near the percentage gains or the drawdowns that we were seeing in gold of recent, and you can see that by these candles right in here. However, today's a different story. Today we had a percent plus rise in gold, but a 2.5% rise in silver. We've been looking at this particular chart. It's our daily chart with our short-term channel lines with obviously an upside bias. We made comments on the fact that we closed right at that midpoint, and here we've surged up. So at least as far as I'm concerned, I do believe silver will be able to follow this channel line to the upper ends of the channel line, the resistance part, and that could take the price of silver anywhere between 1750 and 1780 per ounce, depending on the time that it needs. But my target right now is about 1760 in terms of silver. It could go as high as 18, and that's given we see a weaker US dollar and we see gold continue to move to the upside. So, as I mentioned at the beginning of this recording, it is time to raise stops. We talked about particular stop placements that we do want to raise up to in gold. In silver, I need another day to find a spot that I'm comfortable with because of the sizable move that we saw today. Maintain your current long position in gold. Maintain your current long position in silver. Move your stop up in gold. Maintain your current stop in silver. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.